We are back at the Insight Empire, and this is, of course, Blue Bull Forex. And we're going to be talking today about one of the most controversial, in my own opinion, strategies that so many people are actually introduced to in the Forex market space: support and resistance. And my question is, does really support and resistance work? Because this strategy looks so simple to be true. Just drawing some lines, the market taps a specific point, and then you're looking for short, comes to another zone, you're looking for buys, and this happens almost all the time. And now the problem is, this is actually what most of the beginner traders are introduced to immediately they land in the Forex market space. I did my research and I discovered that between 60 to 70% of retail traders or join Forex quit in the first 5 months of trading, because what they are introduced to or what they think really works, to a bigger extent they come to discover later that it has very limited or no potential at all. So today I'm going to be exploring why support and resistance most of the time fails, and then giving you probably a way that I personally wish I knew when I was trading as a beginner trader back in the days, because this is practically my 5th year trading in the Forex market. And over the years, there are so many things that I am learning and so many things I'm definitely not proud that I did when I was beginning in the financial markets, specifically this particular Forex market. Now, the Forex market we are talking about is one of the largest financial markets, where we talk about 6.5 to 7 trillion US dollars, basically amount of equity circulating in this particular economy. Now, the problem is, out of this 6.5 to 7 trillion US dollars that circulates in this economy, we have various market participants who actually showcase interest in this market, and most of them being institutions, and then we have retail traders. Now, the problem is, retail traders, who me and you, basically contribute to 2 to 3% of the retail of basically the Forex market, because most of the heavyweights or most of the people who participate in this particular market are basically people who can be able to pull substantial funds, and this is why most of the retail traders get their edge getting disadvantaged most of the time, because we are usually talking about people who are controlling billions, people at the interbank level. We talk about investment banks, we have high frequency traders, we have hedge funds, we have Federal Reserve and other big institutions. So me and you trading probably $3,000, $2,000, some even trading with $150, it becomes very, very difficult for them to consistently make money from the Forex market. And today we are basically cracking the code on what do you need to do at least to make $4,000 out of this particular market every single month. I don't know which country you're watching this from, but from the country that I am, $4,000 a month is such a big deal. Now, you're going to be striking this. Now, if you want to make $4,000 every single month trading in the Forex market, the direct implication to this will be at least you are making $200 every single day. This might seem a simple and small target, but realistically speaking, it's crazy, huge, and unrealistic. This is because the market is basically sometimes choppy, sometimes highly unpredictable, and sometimes it is faced by so many factors that are even outside the trader himself or herself that are likely to affect your win rate and also the returns that you're likely to get from the market. Now, instead of focusing on how to make $200 a day for five days so that you can be able to make $1,000 a week, so that you can be able to make $4,000 a month, for me, I would choose to enter 3 or 2 trades that are guaranteeing me in between $1,500 to $2,000 per trade, because I don't believe in high win rate. I believe in something called a risk to reward ratio, and that is one of the things that we're gonna be exploring in this particular video. Now, let's dive into the video. Now, when we talk about support and resistance, because basically that is the simplest strategy I know that works. Honestly, support and resistance works, but you need to approach it from a different perspective, apart from the normal perspective that so many people are introduced to. This is how I have done it. Whatever I'm teaching to you is not theory that I've read somewhere or watched somewhere. It is exactly what I do in the financial markets and what I've been doing for the longest time possible when it comes to this particular approach that so many people actually fail in doing. Now, one of the reasons why people fail in the financial markets, especially those who trade support and resistance, it is because most of the time they become the liquidity. There are three technical reasons why any forex market moves. The first reason why the market moves is to hunt liquidity. The second reason why the forex market moves is to rebalance imbalance, and the third reason why the market moves is always at least to retrace to at least the 50% level of any range, which basically we call the equilibrium range of the market, or equilibrium part of the market. Now, we're breaking this down to liquidity hunting and how does the liquidity hunting happen. All right, now when you look at this particular chart, this is GBP card, this is GBP card, and looking from this particular market, you can see it's a normal price action, giving us a series of higher highs and sometimes higher lows or lower lows. These are basically the 7 institutional reference points that in the ICT we usually call them a series of higher highs, and then of course old highs, and then of course we have lower we have lows over here, which is basically we call them the old lows. We have the old highs and the old lows being the 7 institutional reference points. And most of the retail traders who basically participate in the support and resistance traders, they want to take advantage of these particular zones where the market reversed from the last time to be able now to confirm that this is the entry point that they are going to take, either buys or sells depending on the market structure. Now, this is the simplest forex market structure. Now, in the case the market is going up and down, up and down, up and down, this looks very simple from the look of eyes for you to be able to predict that this particular market probably it is respecting this particular zone, which basically most of the people will call the resistance zone, and then this particular market is coming and getting pushed back at the support to go to the upside. All right, so it's being resistance here and it's being supported down over here. Every time it comes to this zone, the market, as you can see, it's being respected here. So 90% chances from the look of things that this market is gonna go to the upside direction. Now, this is where so many people get it wrong. All right, so the people who are basically the market movers or the smart money are aware that this is what most of the retail traders are doing, and so they are looking for an opportunity to disappoint them. Okay, now this is the game. I want you to understand this. There are people somewhere, okay, who are looking to take your money. And they are not doing it intentionally. They don't know you, but they know that you exist in the financial markets. It's a zero-sum game. And you are there wanting to take money. This means there are some people who has to lose for you to be able to make this money. No emotions, that is just how the game is, all right? So anytime you make money, there are some people who lost somewhere. And anytime you lose money, some billionaires probably, they are doing some yacht party. Now, come to this. When you look at this particular market, there are people who are looking to disappoint you. Now, these are the smart money. This is the angle I want you to look at things from. Now, anytime the market comes here, so many people are likely to go long from this particular point and probably put their stop loss just below this particular point, and then their target will be the previous high. And there is completely nothing wrong with this particular setup. Now, there are other people who are waiting for the market to come up there so that they can engage sales. All right. And for them, they want to wait for the market to come up here so that now they can be able to shoot their short on sales, having a very tight stop loss just above that particular point of interest. And then they burn up target the previous low. This is basically the easiest way to explain how support and resistance works. But now, most of the time, by the time you notice this is the support and resistance zone, so many people are already aware of the same. All right, and the worst mistake happens now when you trade like this. This is the most horrible idea you can ever do, because this is the easiest way to peacefully donate your money to the market. Okay, if you have some spare money somewhere that you're willing to give to the market, it is by exactly doing this crap, because this is what 90% of the people are doing or are looking at trading support and resistance. Why? Because the smart money is aware that this is stop loss. The people who are putting stop loss here down and here up, these are basically liquidity zones. Okay, and so this liquidity zone has to be taken, because this is basically money and the market is hunting money. We have said the first technical reason why the forex market moves is basically to hunt liquidity. So this means you will be liquidity most of the time. Please, I want you to note down, anytime you are trading and you cannot see the liquidity, you are the liquidity. Anytime you are trading and you cannot point out where the liquidity zone is, just touch your chest and say, I Jerry, I Milka, whatever your name is, you are the liquidity and you are about to get liquidated. Now, so what happens is these particular people will wait, and once you enter trades, they are going, to extend the candlestick a little bit or push the market higher to take you out, and then they still go to your direction again to come and hunt people who are waiting for this market to tap here recklessly. And at this particular point, again, they are going also to take from both sides. And these people most of the time becomes me and you, because by the time you notice this is a support or resistance zone, probably this is a zone that has been respected three times or even 4 times, and most of the time you are entering the 4th or the 5th time, you will be subject to these people's liquidity and you are going to lose your money. Okay, this is basically how to counter this particular problem. All right, so you won't come and see the market. For example, this is GBP card, as I said earlier. So as you can see, this is where the market turned. This is a pivot point from this particular pullback, and this is a possible point of interest for you for the next time the market comes to that particular zone again. Now, what you're gonna do is you don't want to wait for the second and the third time. The immediate time that particular market touches the second point, you should be in that particular market for a short position, with your target just being the with a stop loss just being the previous or a point just above that particular point of interest. Just a minute, let me try and fix these, make it better for you to be able to see. All right, that's white now. Gonna make that one blue and then make this one red. Nice one. So you want to make sure that this is where exactly your point of interest is. All right, so you don't want to wait for this second time, because most of the time you keep on waiting for this. Probably the second one was okay, but look at the third one. The market went out completely to take out all the liquidities which were lying, which are basically the external range liquidities, and by the time we reverse back, you are already hit you a stop loss. So this is basically the easiest approach on you trading the support and resistance. So don't wait for the 3rd, the 4th, the 5th time, because you don't know when you are going to be part of the liquidity. So try and enter from the second point when this particular market is going to play out, and then I want you to backtest this for at least 10 trades and let me know how many trades you have been able to secure in the comment section. This is Blue Ball Forex, of course, the #1 Insight Empire. We're gonna be doing this more and more, but remember to subscribe also to encourage me to do this more and more every other time. For now, it's a goodbye. You see you in the next video.